Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the Nasdaq market site, we have Doug Schwenk, the CEO of Digital Asset Research, a specialized provider of clean digital asset data insights and research for institutional clients. With expertise in traditional finance in the digital asset space, DAR delivers data emphasizing accuracy, quality, and transparency to flagship clients such as Bloomberg, FTSE Russell, and as of this week, Chainlink. Doug joins me from SmartCarm 2022, taking place in New York City, which brings together industry luminaries from Web 2 and Web 3, including top thought leaders, researchers, builders, and more. Doug, it is great to have you with us. Welcome to Trade Talks.
Nice to be here.
Tell me more about DAR and the company's involvement with Web 3.
Yeah, we're a data provider, market data, and so we try to bring data that is of the highest quality, which if you think about Web 3 and DeFi and some of the promises there, if the foundation is built on data that isn't clean and isn't reliable, then of course the whole thing can be a house of cards. So bringing that emphasis on quality and institutional focus.
We saw the successful execution of the Ethereum merge. What do you think the merge brings to the space?
Lots of great things. First of all, the environmental footprint is much lower from an energy consumption perspective, but from an investor perspective, we now have yield. And that's very attractive and interesting to a lot of investors who wouldn't have looked at Ethereum in the past.
How have your clients responded to the Ethereum merge?
They're looking at yield as an opportunity to create new products that have an initial component to them. From an investor perspective, gives them access to something that's recurring and makes a lot more sense from a valuation perspective. You can see some cash flows or the equivalent coming off the asset.
How do these yield strategies differ from ones that you've seen in the past?
Well, I think we just exited a credit cycle and we had a lot of unsustainable strategies. Some of the yield farming techniques that were employed, some of the airdrops, some of the, you look at Terra Luna, the yields that they were paying were just ridiculous and not sustainable, maybe even a Ponzi scheme under the covers. But when we look at staking, you're providing real economic benefit, therefore it's a sustainable yield that can be part of a portfolio in the long term.
Do you have any advice for institutions that are navigating this crypto winter?
I think the important thing is to think about building for what will come after the winter is over. We're seeing a lot of investment right now by institutional clients in the infrastructure to be ready, to be able to use these DeFi tools, to be able to invest in the space, to launch products, so it's a great time to build.
And finally, recently it was announced that DAR and Chainlink have partnered up. What is that going to look like?
Well, we're providing initially pricing data, and we're excited to provide lots more data to them, yield data and reference data and events data and things like that, but initially pricing data so that smart contracts using the Chainlink Oracle can rely on prices that are of the highest quality and execute reliably with that.
All right, Doug, great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.